Hey, hi everyone. Good morning, everyone. Thank you for the nice intro as well. So yes, my name is Roger. I'm actually from the UOB Asset Management intermediary sales team. Feel free to reach out to us. We are at the booth over there. We have some ice cream giveaway as well and some nice tote bags too. So feel free to reach out to us if you have more questions after this presentation as well. So yes, like I said, this is actually an exciting period. We know the markets have been very volatile. We do not know what Trump is going to do. We know that the tariffs is going to end soon, but it seems like there's more things coming up. So a lot of investors are already looking at where to diversify your monies. Now, seems like the name of the game is to diversify away from the US, away from the global equities, away from global tech. So these are some of the areas that we think are able for you to capture your opportunities as well. So let us get started. So what I want the audience to take away today is very simply China now, see now. Very simply, the acronyms is very simple. It's just see now, China now. So let's go into the individual characters as well. So let's start off with C. Consumer consumption resilience. We all know that China itself is moving towards a more of a consumption-led change in terms of their economy. There's a lot more into the consumption-driven economy right now. There's no longer all your big bazooka stimulus coming in. That's not the case. That was the case back then, but under the new 13-year and the 5-year plan and all that from President Xi Jinping as well, there's a lot more change. So there's a structural shift towards domestic demand underpinned by a growing middle-class urbanization. I think that's the key point that we want to highlight in terms of how resilient the consumption is in China itself. Then what about N? N is actually near-term opportunities. So we talk about near-term opportunities, I think the audience here will be very familiar in terms of valuations. So when you look at the valuations right now in terms of PB, price to book, PE, price to earnings, is actually at an all-time low right now in terms of China. So later on, I'll share a little bit more in terms of how the charts is looking at and where are the value that we are seeing from there as well. In terms of onshore catalysts. So ever since September 2024, there's a lot more policy announcements announced by the presidency government itself. So throughout the entire 2 weeks of a timeline in September 2024, there were multiple policy changes being announced. Yes, some have their key effects, some may not have any, or rather say, muted effects itself, but there's a lot more action being done by the Chinese government. So that is what we call the onshore catalyst to stimulate the economy and to get the economy started going again. So the key point here, what we want to share is that the Chinese economy is changing. It's no longer driven just by property development, and we know how it went from there. So it's a lot more urbanization, a lot more consumption driven, the valuations looking attractive, and at the same time it's supported by the Chinese government as well. And lastly, the bill, what we call it a world on its own. So if you have been to China in the last couple of years, it's a world on its own in terms of how the EV penetration is massive over there. So over here in Singapore, we know BYD is the top seller right now. I think they have been advertising 10,000 cars in Singapore, and they are top sales right now. We have your Xiaopeng is here as well, XP as well. We have lots of EV brands coming to Singapore, but that's just EV itself. In China itself, everything is within one single app, which is your WeChat. So your Weixin is the app that you go to. Your Alibaba app is the app that you go to. So it's a world on its own. It's a self-defined growth path anchored in innovation, economic self-resilience, and also strategic leadership in key industries like AI, EV, and semicon. So we know at the start of the year, what happened was the DeepSeek came into the picture. So DeepSeek changes everything. The moment the DeepSeek was announced, you see there's a whole bunch, everybody trying to chase towards the AI innovation part. And not forgetting, China actually developed their own Huawei phone. So the first Huawei phone, I think, was last year. The whole phone itself is China-made, including the nano chips and the chips inside. So Apple right now, I think the nano chips is about, 3 mm. China right now, I think for Huawei is about 7 mm. So do not bet against them going towards the 3 mm mark in China itself. So the speed of innovation in China is massive. And I think recently they just held a football-related match with all the human boys and all that. Although it didn't go well, but that is the kind of innovation it is driving towards in China right now. Okay? So let's look at it a lot more details. So China contributes nearly 17% of the global GDP. As you can see over here, I think the numbers are stated over here as well. So that is the key point in terms of where China is in terms of GDP numbers. And the key point is also China's urbanization and wage growth. So you can see over the years since 2014, about 10 years or so, how the population has gone up. But at the same time, in terms of urban population and the China average yearly wages have also gone up as well. So that gives you a sense in terms of what we call the first C, China consumption resilience. So the urbanization is coming in, the consumption resilience is also coming in from there as well. Second, the top 20 largest consumer markets in 2020, China will be one of them. So China, in terms of the consumer markets itself, is 1.5 B. So what we define as consumer is over here, someone who will spend at least $12 per day. So in terms of where China is as compared to the rest of the other countries in the world itself, China will be the biggest by 2030 itself. That's why we say the consumption resilience in China, it is very strong over here. Also, one of the key points when we talk about consumerism, right, is actually some of the top 5 strongest spirit brands over here. So number 1, we have Wuliangye over here. Number 2, Kweichow Moutai. Number 3, tequila. Number 4, which is actually a Korean brand. And number 5, you have Liu Zhou Liao as well. So why we wanted to bring this out is because Kweichow Moutai is actually the top holding in China A50 index. Okay, and we are very familiar with that because that is our baijiu. So that is actually, just looking across the top 5 brands right now, right, in 2024, you have what? You have 3 brands that are actually belonging to the China market as well. So we talk about where are the onshore catalysts. So these are some of the policy responses that started in September 2024 over here as well. So I won't go into specific details. The numbers are all showing here. So basically, bottom line is President Xi and his government, right, is fully supportive of what China is going to do in terms of innovation, in terms of consumption. And we have seen, I think, start of this year where he hosted, all the tech AI leaders and then shaking hands with them. So the most poignant moment over there is where Jack Ma actually appeared and then shaking hands with President Xi Jinping. So that was the moment where everybody acknowledged that China is changing. Everybody acknowledged that the tech leaders in the world, tech leaders, especially from Jack Ma's perspective, right, are also coming in to grow the domestic market. So previously there was a lot of crackdown and whatnot, whereby Jack Ma was actually kind of ostracized, if you put it that way, and also being sheltered away. And all. So the moment he came into that meeting itself and then shaking hands with President Xi Jinping, even though it's a very simple handshake, but it symbolizes a lot of changes. It symbolizes that President Xi Jinping is willing to support the tech growth, the innovation part that is driving China's market right now. That's why we have so many items being lined up in terms of the innovation tech and the development over there as well. Next, we talk about sector valuation. So over here, China trades at about 10.5 times forward PE, 1.3 times PB ratio. And the breakdown highlights that there's a deep value in terms of financials, energy, utilities, industrial sectors that offer actually single-digit price earnings as well. So lastly, the third point is also about strong growth projections for IT, healthcare, and the consumer discretionary. So over here, you can see that in terms of sector valuations itself, the top sectors that we're looking at is financials, energy, utilities, and industrials. So it's a bit messy, but probably the next chart will be a lot more better. So second point that we want to highlight is China's structural opportunities. So the first part is China's 2060 carbon neutrality target. So that is their target whereby they want to go carbon neutral. And this is actually a worldwide thing that's ongoing. So there will be an increased demand for EV components such as lithium batteries, equipment for battery production, increased demand for semicon-related products and services. So we all know that right now, inside your Tesla, inside your BYD, yes, BYD produces its own batteries as well. What is the next largest battery maker? It's actually CATL. So CATL, again, is actually, I think, owns about 30% of the market share in terms of battery making. So CATL is also one of the top holdings within China A50 index as well. So that is also one of the key points to highlight that the battery making and the EV segment itself. So it's the entire chain in terms of EV. So from the production of semicon, battery making, all the way to the parts, all the way to the assembly, until the last stage whereby the delivery of the models itself, the entire chain itself is in China. Okay, even the raw materials that President Trump was actually trying to get the deal done with President Xi is that China have the raw materials. Yes, US are able to develop all the semicon chips and all, but they need the raw materials. And that raw materials right now is in China. So if you talk about tariff war and whatnot, right, actually Xi Jinping is a smart person. He doesn't need to go into a tariff war with President Trump. All he needs to do, he just wants to make sure that he gets the best deal out of it. And he knows that by going to war, it doesn't make sense. Okay? So it doesn't make sense to go into war because he knows that he just want the country to develop and to prosper as well. So that is his main point. Second point, we talk about COVID-19 pandemic and the growing population in China. So we all know that China used to have a one-child policy, right? So with that, there's a lot more in terms of the growing population is indeed happening, not just in Singapore, not just in Japan, but also in China as well. So there will be an increased demand for robotics, AI, cloud computing solutions to increase the efficiency in terms of healthcare sector. That's why in the earlier chart, we talked about healthcare sector being in a depressed valuations right now. So China also dominates the green supply chains. So number one, given the extensive control and dominance in critical base, China has actually established comprehensive supply chains for EV and the EV battery components making as well. So 80% of the EV batteries are actually manufactured in China. 95% of the EV battery anode component are actually produced in China as well. So that's why I said, in the whole chain of EV cars itself, yes, it's nice and it's nice to drive and whatnot, but the entire assembly chain is being manufactured in China. So that is the key point that we want to highlight. And also China dominates the green supply chain. So on your right, you can actually see where China stands in terms of all the different component parts that you need in the EV car. So the global EV battery market is dominated by Chinese players. So like I said, CATL is about 36%, followed by BYD. So CATL is the undisputed market leader in terms of EV batteries, and major capacity expansion is also ongoing in Europe. BYD overtook LG Energy Solution as the second largest player, thanks to its increased sales in BYD. Automotive sales as well. And I think recently we saw Xiaomi coming out with their own cars as well, whereby I think 200,000 orders came in, I think within an hour, or is it 500,000? So again, that kind of speed, that kind of innovation, yeah, you have to take notice of what China is doing right now in terms of the innovation, the AI, the robotics, the EV part of things. So why FTSE China A50 index? So what I have earlier presented is about the China story. Basically, what China is moving. Yes, we are all worried about what is happening to the property market. Yes, we are worried about whether the consumption is actually picking up in China itself. So for those who have been to China recently, you will see actually the whole economy is rather vibrant in terms of people coming out, spending, people talking about your EV cars are everywhere, consumerism is picking up. Yes, it's a little bit slower, but that is the whole structural demand that needs time to change. That's why the structural changes in China itself, you talk about the carbon neutrality, you talk about the COVID-19 pandemic and all that. These two factors takes time. Okay, it's not an overnight, fly-by-night kind of a thing. It takes time, but we are seeing effects coming in. And at the same time, while you got to get your Chinese nationals to start spending money and developing all this, you need support. And where the support comes in, it comes from the government. And right now, the government is very supportive of what is happening in China. So that is the whole China development as we are seeing right now. So why FTSE China A50 index? So very clearly, it's very simple, it's transparent, and it's predictable as well. So constituents are actually of a higher market cap that assign a higher weightage. Okay? No complex index methodology that will introduce higher or unsystematic risk as well. Low index turnover. So the largest stocks typically remain as the largest stock, resulting in lower index turnover during a rebalancing period. It lowers your transaction cost for passive management approach. Lastly, balance between the representation and the tradability as well. So index is sufficiently representative of the China A-share onshore market index itself. So it's a free float market cap approach. There are 6 boxes over here. I'll start off from your left, going in the clockwise direction itself. So large market cap establishes and matured company. Later I'll share a little bit in terms of where are the companies inside. It's a strong brand and market presence. So FTSE is the one that we're working with. So the FTSE China A50 index actually started 20 years ago. Okay, so it's been around for the longest time. It is not an overnight kind of a thing whereby FTSE suddenly decided to go for China A50 index itself. The third point, it attracts institutional investors as well. And we talk about wide research and media coverage by FTSE. Second last point, potential and ability to distribute dividends. This is not guaranteed, like I said. There will be a potential of delivering dividends as well. And then lastly, lower volatility and risk compared to smaller cap companies. This one is a little bit more complicated, but basically reduces the unsystematic risk that is coming in. But you try to, the systemic risk is actually your market risk. The rest you can actually cut down by stock selection and stock picking selection as well. So index periodic review and rebalancing, we are done. The review is actually done on a quarterly basis. It's stable. The timely rebalancing is also aligned with the current earnings season and the central bank meetings as well. So this one I think is an important chart. I just want to share. So FTSE China all cap index, right, is about 2,000 over stocks. China A50, you have about 50 stocks only. So in terms of total market cap representation, your all cap in terms of China A50, it's about 37% of the all cap. So even though you have only 50 companies, but you are getting about close to 38% of the market representation of the all cap China index itself. That gives you a sense in terms of where these 50 companies are. Because we all know that investing in China is not easy, it's challenging, as you can see in the last couple of 4 or 5 years. So do you want to go into the small and mid cap, whereby it's a lot more volatile? Yes. But then, where the returns is a lot more as well. But are you prepared to go through the volatility? If not, you choose the biggest 50 stocks listed on the China, Shenzhen and the Shanghai Stock Exchange. And it gives you a very nice representation, which is about 38%. We talk about the valuations, like I shared, in terms of over the last 10 years. So on your left is actually the PB ratio. On the right is actually a price earnings ratio. So we are looking at, right now the mean is actually fairly, a lot more away from the current, or the fair mean numbers as well. So all in all, it's actually looking cheap. This one is a messy chart, but the key point here is China A50 is less correlated to the rest of the other indices. So earlier on, I started off my presentation by saying that in terms of diversification, where can you diversify your money out of US, global? China is an area for you to consider because it has a very low correlation in respect to the rest of the other indices as well. So in terms of performance, so let's go down to the numbers itself. So at the top, we have the 10-year numbers. So the FTSE index itself, this is actually the one. So it's about 10% or rather 3% on an annualized basis over the last 10 years. Over the last 5 years, I think we have about 0.8, slightly close to about 1%. But in terms of how when market move, right? Yep. So this is the recent numbers that we are seeing is about 30%. That's on a 6-month basis. And over a 1 year, we have about 22%. So when it runs, it does run. But when it loses money, it loses less. That's why the volatility of China A50 is lesser, because it's the 50 largest companies, the vol is lesser. You don't get that kind of big swings in terms of what we are seeing in the China small and mid-cap market. So very simply, quickly, and going into it, the ETF itself is actually SRS approved. It's listed on the SGX exchange. I wanted to quickly go into, so the accessibility is that you get access to the top 50 companies listed on Shanghai and Shenzhen Stock Exchange via a single fund vehicle, available in SGD and USD, SRS compatible, tradable on SGX from 1 unit order, and also is EIP as well. The trading code is actually JK8, so that's FYI. I wanted to quickly go into the top 10 holdings. So top 10 holdings you can see over here. So Kweichow Moutai is top holdings as of 30th of May. You have CATL, China Merchant Bank, China Yangtze Power. So amongst all these companies, right, most of you will have realized, you will know the familiar names. Kweichow Moutai, BYD, Ping An Insurance, ICBC is over there as well, ABC is over there as well, and the Industrial Bank is over there. So these are the biggest names that we are seeing. And then of course, with that, the representation from financial sector is also one of the highest. It's about 34% right now for the index. I think that's about it. I want to quickly to summarize. So just to quick one-liner to summarize everything. For clients that are looking to diversify your portfolio and looking where to, opportunities of, where are opportunities from an investing standpoint and willing to take a longer time horizon, that's where you can actually consider the China A50 index. And because investing is quite difficult in the China market, you need to pick the stocks. You do not know where we are going to. There are Greater China, you have China All Shares, you have everything else on the market right now. So the easiest will be probably just to select the top 50 stocks listed on Shanghai Shenzhen Stock Exchange. It gives you a nice representation of the whole China market. It gives you a nice return as well in terms of performance. And lastly, in terms of risk, volatility is a lot lesser as compared to the all cap, as compared to the small and mid cap. So I'll end my presentation here. In terms of the timing as well, but our booth is over there. We are, like I said, we are giving out some ice creams as well. We have a lot more brochures over there as well and some of the placemats. So feel free to reach out to us if you have any questions. Thank you so much. Thanks everyone.